This is Rod Kusin Spooman for Risk on September 26, 2014, all times in the Charter Central Standard Time. Today we're going to talk about how the premium can forecast trend reversals before they occur. Yesterday at 11:27 a.m. the premium tanked big time. It was a huge bar. And if you watch our video from yesterday, we had forecasted that based on this particular bar on the premium, chances are tomorrow will be short, and that we would continue to see a further sell-off. But we also said, make sure that you watch your indicators. As it turns out, we did not have a further sell-off. However, the premium did forecast two trend reversals, which did in fact take place during the first couple hours of trading. Before we show you our primary indicator for determining the trend, I'll just mention that at the open today, we were long. Our indicators showed us that we were long at the open, so we were looking to take a long trade. But at 8:57 this morning, the premium tanked and left us with a naked bar. Now, that naked bar was forecasting that the Spoos should return to a price of 59.75 or less. That having been said, nevertheless, the primary indicators that we were using were forecasting that, at least for the moment, we were long. But now the premium indicates to us in advance that that trend is going to change. And that's why the premium is such a beautiful indicator. It can tell you what's going to happen before it occurs. So, up we went. Yet, the anticipation was that this trend is going to be short-lived and the market is going to short after this initial rally up. Based upon the use of our upper threshold on the premium, when we hit the high here at 68.50 and tagged that price at 9.05, the upper bar or the high of the premium at that point in time was less than or equal to our upper threshold, meaning that that move was over, and certainly a good time to short the market in anticipation of a return back to 59.75 or less. So here a fill of even 68 with a drop back to 59.75 is not a shabby trade by any stretch. And in fact, that is exactly what took place. The premium doesn't lie. Here's 59.75. Okay, we'll get it. Well, let's just do it this way. I won't fuss with that. 19.59.75. Boom. That's where the price should return to. That is exactly what it returned to. Not 59. Not 1960, but 1959.75. Exactly. And that's just exactly what happens. The premium doesn't lie. So, nice move. Nice move. We see this happen practically every single day. Premium doesn't lie. So, even though our initial indicators showed us that we were long at the open, the premium forecasted a trend reversal. Later in the morning, at 10:03 to be exact, it also forecasted another trend reversal to a price back to 67.25, 1967.25. How do we know that? Because this bar on the premium associated with this high on the Spoos was not a divergent bar. It was higher than the threshold level set at negative 6.82. That means we can expect a return to the price associated with that bar on the premium over here. So even though the premium forecasted a trend reversal to go negative, which in fact occurred, it also forecasted another change in the trend back to a long position. We'll show you this on our primary indicator in just a moment. But there you have it. Two trend reversals that take place long before any indicator would have been able to do so, other than the premium itself. So here we have this drop in the price of the Spoos associated with this high on the premium, which is less than or equal to our premium threshold. We come down here to 1959.75, exactly where the premium said we would go, at which point in time the lows of the premium are now at or above our lower premium threshold, and a nice time to take the long trade, running it right back up to the price forecasted here of 1967.25. Now watch what happens here. 1967.25. Let's be exact. When we hit this price, which is not hit here, okay? That's 1967, not 1967.25. That isn't hit until right here. And then within just a couple of minutes after that, we exceed 1967.25 with a new high on the premium that continues to move the market up for the balance of the day. And sure enough, when we finally do hit this high, okay, where are the highs of the premium? Only slightly above that threshold level. And the rest of these highs never make it much above, well, really does make it above the threshold level, with the exception of that particular bar. So what this is telling us, you see, is that we're still going to be due to see a rally up on Monday morning based on what the premium here is projecting. There's nothing as good as the premium. And here's more proof of it. Now, we said there were two trend reversals that were forecasted. Let me show you the primary indicator that we use. Now, I'm not going to explain this whole thing to you. I'm just going to demonstrate it for you right here. This particular chart is what we use for determining the trend. When the slope of this particular indicator is positive or hits a value of 1 associated with 100 on a typical stochastic, the trend is long. It's short whenever that slope changes to a negative slope or hits 0. So at the open, which is right between these two bars, you can see we're in a positive slope. We're going long. Okay? We're long. And even though we have that little pullback, we're still long. And then here, once again, we're long. And even here, we're long. And we're still long until right in here. You see how the slope of this indicator is beginning to go negative. Now we're short, but when we hit that particular bar at 1013, even though the indicator was short, the premium forecasted that the trend is going to reverse again. And sure enough, it does. And there you have it. So even our best indicators couldn't keep up with the premium itself. The premium told us we're going to wind up getting into a short, even though the indicators were long, and then it said we're going to go long, even though the indicators were short. Beautiful. The premium is a superior indicator to anything else that is out there because it gives you that heads up long before any other indicator is able to tell you what's about to occur. And why is that practical? Well, if you're holding a long trade and the premium says you're going to come down, well, then you better make sure that you capitalize on those profits because you're about to get all of your profits eaten away. And if you're holding a short trade, when the premium said, hey, we're going to turn back into a long, well, you better capitalize on those profits as well. So, oh yeah, the premium is very, very useful and more accurate than any other indicator in existence. But you gotta know how to read it. And that's what we teach in our course. So please, take the time. Spend a little money on your trading career. It is well worth it to have the right kind of indicators with the right training so that you can trade probably better than the pros. So that's our video for today. And this is Rod Kusanen, Spooman for Risk.